Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in. Let's take a look, see what people are sharing. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com, where I dive deeper into these topics, looking for potential investment opportunities, sharing those opportunities with everyone in the community, showing you guys how I'm doing things, how I'm evaluating companies, how I'm evaluating sectors, the fundamentals and the technicals for most everything. Discount coupon code. It's discount is the coupon code if you want a discount. We're going to start with Sahara here. He says, I recall I showed it had popped the coil. After holding those key 150 moving average and EMA averages, I said it would now have to take out those lesser key monthly moving averages, 12 and 20, along with the 50, which it has yet to do. No go until it does. I'm not in the total technical camp. I'm a hybrid investor. I look at commercial inventory levels. I look at the ratios. Everything that I see is a go for oil. Now, if I'm wrong and something does turn back on me, I can just wait it out because the fundamentals are at my back. The wind is at my back. And the retest that we're doing, just to pull this up, there's that retest on the trend line. Here's crude oil. You can see that trend line. We're retesting as we go through it today. So that's what he means by it hasn't broken out above any of these other levels to basically get us into an uptrend. The first thing to do is to break the downtrend. That is what we've done here. Then we usually get a retest, which is what we are currently in process of doing. And a lot of the other companies are doing stuff that's very similar too, depending on what companies you're looking at. He's got projections here. If oil does take off, and I bet you they're Fibonacci sequences, 145, 239, 382, and 572. That is what he is projecting oil to go to if we start this big move. And obviously, people are going to say, respect your post. No way crude would ever get to those levels without some sort of government intervention to bring it down. Unless you're implying that without intervention, again, I say this out of respect. A lot of people disbelieve the move. It can't get that high. People can't afford it. All I'm going to say is this, guys, it deals with inflation, the value of the dollar, and then supply. A lot of people think that we've got all this supply. I don't think we do. And I think spare capacity is way tighter than what everybody thinks. And it will depend out in the future of maybe 26, 27, 28, 29. What if we get a gap of 5, 6, 7, 8 million barrels out in 2030? Do you think oil is going to be priced anywhere near $100 a barrel? No. The clearing price and how much demand destruction is needed will be multi $100. And I don't think people understand the gravity if some of these materials, just in general, I'm not saying oil, but just some of these materials getting in a really tight squeeze and not being able to grow the supply very quickly. Now, I'm not really talking about oil. I'm talking about uranium. I'm talking about copper. I'm talking about silver. Guys, what's the value of a company if they can't run their line at full speed? If you get silver delays, if you get oil delays, if you get delays in some of this, you're not going to price them out, even if oil is $3, $4, $5, $600 a barrel. Now, what does that mean in gasoline prices? Well, here in Colorado, the gasoline price is we're about $2.50 a gallon. If we were to get to multi-$100 barrel oil, you're probably looking at $5 to $10 gasoline, depending on how high it gets here. So $5 to $10, that's really not, I mean, it's not good for sure. And we're going to have to kill demand. But that's what happens if we get a rollover in shale oil and the rest of the world can't respond with too many barrels. There is 100 million barrel per day production. If we start to decline at, say, 6 to 10%, at a 6% decline rate, we need 6 million barrels to stay flat every single year. So that means that we have to increase production between now and 5 years from now, roughly 2030. We're going to need 30 million barrels per day production to stay flat. 30 million barrels. I don't know where it's coming from. That's 30 million barrels. So that's kind of how I view it. And when I invest in this stuff, I take the big picture view and say, you know what? I'm going to buy some and sit in it. And I can do it at a ratio that's incredibly cheap. It's also bottomed against all of the other asset classes. So if you were to price crude oil against, say, the NASDAQ, that had a big breakout, and now we're doing the return move. Now, I have it on logarithmic there, but there's the breakout and then the return move, and then we'll move on up. Everything looks good. Price in other asset classes, crude oil versus gold, it did a breakout, and now we're doing a back test of the breakout. It's in all of the ratio charts too. Looks good. Commodity currencies looking like bottoming or at least trying to. Brazilian real definitely bottomed against the US dollar, broken downtrend, and there's investment ideas around this on the website on how to play this. 1, you break the downtrend. 2, you create a higher low. And 3, you make a higher high. That is, by definition, a new uptrend. Australian dollar versus the US dollar, that also looks like it's bottoming. If you were to take a bigger picture view on some of these, they've got these false breakdowns. So this is your downtrend broken. This was in 2000, 2003. So the bottom was 2000, 2001, and then we broke out. And now we've got a consolidation, 3-hump consolidation. We are squeezing up, just like platinum is squeezing up here in the corner. We've got a nice little false breakdown. And then now we're going to start to rocket higher, potentially. And that's what I'm showing there is that bottom. And then we've also got Canadian USD, which also has the same longer term pattern, falling wedge, breakout, falling wedge, breakout. And that is what's going to be bullish for commodities. We're just at the bottom here, which is actually a really good entry point for probably Canadian assets. It looks fantastic, guys. This is about as good as you can get from a charting perspective. It looks fantastic. Coming back, Warren Buffett says, I don't know how to predict the stock market. I don't know how to predict interest rates. I don't know how to predict business. All I know is if I buy the right kind of business at the right price with the right people, I'll do well over time. And I think that's where people need to get. That's the mindset. Buy value. Buy when things are cheap. Buy when it's out of favor. Buy when the price to earnings ratio, which is the CAPE ratio, is cheap. Buy when price to book is cheap. Buy when no one's looking, and then have extreme patience, which no one has. And that's what you're exploiting. You're exploiting their fear. You're exploiting their impatience. You're exploiting everything. All the tools that they haven't developed as an investor is what you're exploiting amongst the retail investors. And you can buy these really cheap when people aren't looking. Peter Schiff says, how can Trump describe interest rates with a 4 handle as being sky high? If Trump thinks interest rates are sky high now, just wait until he sees how much higher they are going. There's truth to that. We've broken the 40-year downtrend. Interest rates are chugging higher. They could go way higher. And what's that going to do to the economy? I'm sure we could have problems, and we could maybe have a stagflation, high inflation with a slowdown or recession. David Burrow says, industrials continue to be key leadership theme globally. Bottoming before the market in 2022, industrial ETF VIS continues to make new relative highs versus the equal weight SPX. There's your downtrend line that's broken to the upside, and it is working its way on up, where the industrials are outperforming the S&P 500. Peter Lynch quote, he says, nobody can predict interest rates, the future direction of the economy, or the stock market. I wonder if he got that from Warren Buffett. Dismiss all such forecasts and concentrate on what's actually happening to the companies in which you have invested, says Peter Lynch. Buffett and Peter Lynch are saying the same thing. These guys have very good returns over long periods of time. They also never blew up. I'm listening. Unusual Whale says the bottom 50% of households hold 2.4% of US wealth per Bloomberg. Yeah, but you know, that's I, I don't know if the bottom 50% should have a lot of the wealth anyway. And I'm not saying that they don't deserve it. What I'm saying is, well, maybe I am saying they don't deserve it. And the reason is because you need to save. You can't just spend, 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 spend. And when I see a lot of people, and by definition, you could be making a lot of money. You could be making $200,000-300,000 a year and be in the bottom 50% in terms of wealth because you're spending all your money. So it's a trait. It's not that people can't afford the bottom 50%. There are people in there in that cohort that can become wealthy if they chose to do it. So let's say 10, 20, 30% of the 50% could easily hold more than 2.4%, but they make choices to be in the bottom 50% of trying to act rich, in trying to buy crap that they can't really afford. They're buying too big of a house. They're house poor, perhaps. Or maybe they don't own homes, but they go and they buy depreciating things like very expensive cars and trucks. And they spend all their money on cars and trucks when they could have been building wealth. Anas says, wow, it is so bad in Europe that Brazil is re-exporting LNG imported from the US. What the heck is going on here? What the heck is going on? Trump, we need double the energy we have in US for AI to be as big as we want it. Yeah, no duh. So where's that energy going to come from? I don't think natural gas can provide all that energy. You think we're going to fire back up coal? I think it's a possibility that we fire back up coal to some degree. It's possible. Another thing that they can do is they can temporarily put natural gas turbines like right in a parking lot and I guess fire it all up. They could do that very quickly. I just don't know how much natural gas we can pump if we really added all of this to the grid, and or added those get natural gas turbines in a parking lot next to where they need it. It's tough to say. We also need to build out our grid. Our grid is going to be absolutely, the capacity is way off compared to where we want to be. So we're going to start building this grid. I'm sure steel, aluminum, copper, all this stuff's going to be in real high demand to build out these grids. But this is going to get real interesting. I think, here's my opinion. I think the grid won't be able to handle it. I think we're going to get into a really bad gasoline problem, oil problem. I think oil is going to get sent to the moon. I think natural gas will go way up. We're gonna suck down as much natural gas that we can produce in terms of LNG and electricity generation. And we're going to have to build out our grid as fast as possible. I think we're going to boom in steel and iron ore. I think it's going to be one heck of a boom everywhere. I think all of our solutions that we're trying to do, we are going to go short in shipping. Shipping is going to be a huge bottleneck. I think day rates are going to just rocket when we try to implement all of this all at the same time. We're going to have to burn coal. And remember, shipping, we have to ship coal, we have to ship iron ore, we have to ship fertilizers and all these other things. It's all going to get just jammed up. It's all going to get jammed up. And we have such a great opportunity to buy these things when absolutely no one's looking. We are at rock bottom, dirt cheap pricing. Dirt cheap. I said silver's still looking like a beast. Big cup and handle. We've broken out of the handle here. to the upside. Guys, we are sitting on top of the pattern. What does that mean? Higher. Don't worry about the day-to-day movements. We're going up. We are going up. Now, are we going to go to 373 right off the bat? Probably not. This is a gigantic pattern. I need people to understand that these are big long-term charts. This is a 45-year chart. We may go multi-$100, maybe even over $1,000 silver. I'm not saying that's a projection. I'm saying it's a possibility, but it's probably going to take 10 years or something. It might go really fast, hard to say. And what you do is you notice that we've got the pattern, it's broken to the upside. People are bored of it. They're frustrated. They want it to happen now. And what I'm going to say is you make money by positioning on the board, so to speak. You play the game, you position on the board, and then you wait for the move. You wait. It's coming. And if silver gets squeezed, industry needs this stuff, and they are ramping silver demand rapidly worldwide. This isn't a little bit, it is ramping rapidly. China is worried that we are going to run out of silver, and they're stockpiling it for their industry. This is going to get dire here, and we've got the setup for this to happen. Here's it zoomed in on the right-hand side. Breakout, flag, breakout, flag. And then we've got the small selling pressure candlesticks ready to potentially break out at some point. And it's like, guys, this isn't the time to be impatient. What I'm doing, I'm loading up. I'm going to wait for the move. Wait for this big move to transpire and move. And if people get scared for any sort of currency problem, it's just going to add and pile on to the demand. I think what they're doing is trying to divert demand away from gold and silver. They're diverting demand away from it using these stupid cryptocurrencies. China is diverting demand towards gold, and they're trying to squeeze the American banks through not only them buying it, but their entire country and the citizens in China are buying gold. So they're diverting their power towards gold. They're trying to divert away from silver because silver is going to get squeezed to the moon by industry. So silver, I'm sure people are selling it in America because people need to buy whatever and maintain their lifestyle. So they're gonna transfer the silver from broke people who need to sell it to industry most likely, or to those that can afford it. And when this thing takes off, everyone's going to be left holding the bag here. I mean, this could be a currency problem that transpires, or we squeeze the living crap out of it from a demand perspective in industry, or it's a combination of both, which could be. We'll find out what they attribute the reason to later on, but people are massively positioning in silver here. It looks ridiculous. Gold gained 27.2% US dollars in 2024, 35.6 in euros, 37.1 in Swiss franc, and outperformed a booming, low-rate supported US stock market. Those are just currencies going down, guys. They're just currencies going down. That's all they're doing. Warren Buffett says, I think that most important investment you can make is in yourself. Warren Buffett, and I agree with that. The better and more prepared you are to invest, the more money you make. So your best investment is to continue to develop yourself. And we go over a lot of stuff on the website too, which I think will develop you as an investor. Bravos Research says, shocking, home buying conditions have collapsed to levels never seen in 65 years. People don't feel like buying homes. Well, yeah, no crap. Interest rates have gone up and we have expensive home prices because we're short homes. Of course, people don't want to buy homes under those conditions. I wouldn't either. Here's nat gas. The pullback is done. Price target 750. Here we go. Why are we going to 750? I thought natural gas was plentiful because inventories are dropping. We dropped in natural gas prices down to $2-ish an MMBTU. And here we are dropping the inventory levels and not producing enough. 750 is going to be the target here. We're going to make a lot of money on our natural gas investments that we've entered. This is one play or theme that I think will play out quite well. And hopefully we get 10 times our money or something. Put this in the Louvre, all-time high. So this is the 4-week average U.S. imports from Canada of crude oil, 1,000 barrels per day. And we continue to import more and more and more from Canada, over 4 million barrels worth. JC says the final silver slam before the silver squeeze. Platinum and palladium are flat today, and copper's been rallying off its lows. The short position in silver is massive, heading into a potential 25% tariff on more than 50% of imports a week from now. Last chance to cover. Here's another thing. We have all of our banks are all they're shorting gold, silver, and platinum and palladium. Those are the most shorted materials in the market ever. Why? Is it for industry to buy these at the cheapest possible price? So what they do is they hold the pricing right on the cost curve. What happens when this all unwinds? What happens if these shorts just blow the whole system up? It's coming. It's coming. And platinum, palladium, silver, and gold are the most shorted materials on the market by the banks, the big boys. Silver's number one, platinum's number two. Rick Rule says, I noticed postings on social media where people have uranium as part of their handle, and they're saying, I sold my uranium stocks. The game is over. That's lovely. Truly lovely. Come on, guys. Don't give in. Become part of the community. We can support you. Art Berman says, more energy blindness. Trump wants to tax heavy Canadian oil, the backbone of U.S. energy dominance. Smart move. U.S. refineries rely on it to balance the light shale oil they export. Yeah, it's absolutely stupid. Trump's dream of energy dominance relies on Canada. Exactly. Exactly. Drill, baby, drill. Better start drilling or oil production is likely to start rolling over. So U.S. oil production versus total rigs operating, we're seeing the rig count drop. We are also seeing drilled uncompleted wells inventories being depleted. We're probably going to roll over in production here pretty soon. Whenever that does occur, we're going to see prices move on up. We're going to squeeze oil all the way up. It's already starting. That's what the first post was of this talk here. Global oil inventories continue to decline to multi-year lows. Yeah, we're flush in oil here as oil inventories are at probably pretty close to all-time lows in terms of days of coverage. All-time lows in terms of days of coverage. I don't know if that's a 100% fact, but I'm guessing it's probably pretty close to it as we drop way down in inventory. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And that's all I've got. A reminder here, for those that are on a part of the website, I can't make it at 5 p.m. Eastern time. There's some reasons that I have to do something for that. So we are delaying the start from 5 p.m. to 6:30 p.m. It's a 90-minute delay that we are going to do for Sunday, this coming up Sunday. I changed it on the website. It's something I can't get out of that I have to do for my daughter. There's some other reasons. So, and I'll let you guys know that during the website what it is if you guys are interested. But it's going to be 90-minute delayed on Sunday, 6:30 p.m., which I rarely delay any of these things, but I have to this time. All right, guys, we'll catch you Sunday, 6:30 p.m. See ya.